You're listening to AI Prism from Seoul Economic Daily.
It's Monday, June 29. Let's look at what this means for retail investors in Korea.
Yeah, and we're completely skipping the background fluff today.
Exactly, just pure risk calculation. We really want to know, does today's data actually change your Korea portfolio?
Right, because we are looking at three major colliding forces here.
You've got SK Hynix's upcoming ADR, the frankly historic U.S. dollar to Korean won exchange levels, and, peaking retail margin loans.
Right, so we have to start with July 10th.
The SK Hynix Nasdaq ADR debut.
Exactly. And for anyone unfamiliar, an ADR, an American depository receipt, is basically just a mechanism where a U.S. bank buys foreign shares and issues a dollar-denominated certificate.
So it gives retail investors direct dollar-denominated access to a massive company. I mean, it's a $1.33 trillion company, right?
It is a behemoth. And right now, SK Hynix is absolutely dominating the AI data center space. Like, they hold a 56.4% global market share in high-bandwidth memory chips.
Over half the market.
Right.
Wow. So, I mean, for a U.S. investor who normally has to jump through hoops to navigate a Korean brokerage account, oh, it's a nightmare.
Right. So this ADR listing is basically like getting a direct flight instead of a really messy layover.
That is the perfect analogy, yeah.
But wait, let me push back a bit. If I'm buying in dollars, SK Hynix's actual revenue and their local share price are they're still priced in Korean won.
Correct.
So if the won is tanking, doesn't that just eat directly into my dollar-denominated ADR value?
Oh, the math on that is brutal. Like, imagine you invested $100 in a local Korean asset last year and the stock price doubled.
Okay, so I should have $200.
You should, yeah. But if the local currency simultaneously lost half its value against the dollar, your actual return when you convert it back to U.S. currency is exactly zero.
Ouch. So the exchange rate completely erodes the asset's performance.
Exactly. And right now, the numbers reveal a massive historical red flag. The second quarter average for the USD to KRW exchange rate just breached 1,500.
Wait, 1,500?
Yeah.
Okay.
I mean, we literally haven't seen it cross that line since the 1998 financial crisis. That is insane. But, looking at those numbers, the disconnect we've been seeing suddenly makes perfect sense.
How so?
Well, the hashtag KOSPI is up roughly 100% in the first half of 2026. But that index doubling doesn't actually mean anything for a U.S. investor if the local currency is at 1998 lows.
Right. The FX rate is just silently wiping out their gains.
So that has to be why foreign money is running for the exits, right? Are they just fleeing the weak won?
They absolutely are.
Yeah.
They see the currency drag and are reacting accordingly. I mean, foreign investors have net sold a staggering $91 billion of hashtag KOSPI stocks in 2026 alone.
Wow.
Yeah, that's like 136.7 trillion won.
Yeah.
Foreign institutional investors are just taking their profits before the exchange rate eats any more of them.
Makes sense.
But meanwhile, domestic retail investors in Korea, they are doing the exact opposite. They are piling in.
I don't know. A massive domestic buy-in doesn't automatically mean disaster, does it? I mean, we're in a generational AI boom. SK Hynix owns over half the market for the chips making this possible. Why shouldn't retail investors lever up to catch this wave? Couldn't this towering leverage just be, normal bull market enthusiasm?
Well, enthusiasm is fine until the bill comes due. Korean brokerage margin loans, which is the credit investors use to buy stocks on leverage, just hit 38 trillion won.
Which is what, about $25 billion?
Around there, yeah. And that is nearly double the 5-year average. Surging margin loans to double their average historically signals peak retail positioning.
Wakes.
And the immediate threat here is the Bank of Korea. They flagged a rate hike for the second half of 2026.
Oh, which immediately raises the borrowing costs on that massive $25 billion stack of leverage.
Precisely. And here is how the mechanics of a margin cascade actually work. If a central bank rate hike makes those loans more expensive to carry, a lot of retail investors won't be able to cover the higher interest.
Right.
When their account falls below the required maintenance margin, brokers don't ask politely. They automatically liquidate positions to protect themselves.
Which drops the stock price further.
Exactly. That sudden supply glut drops the price, which then triggers the next tier of margin calls for other investors. It just becomes a mechanical, forced selling time bomb.
So bringing it all together, the SK Hynix July 10 Nasdaq ADR creates a new direct dollar-denominated entry point, but a historically weak one means hashtag KOSPI level returns translate materially less at the dollar level.
Margin loans at double the 5-year average signal peak retail positioning, and a looming Bank of Korea rate hike directly threatens this leverage stack.
For holders of Korea-linked assets, navigating this requires weighing the ADR's direct access against the severe headwinds of FX weakness and leverage risk. So definitely a lot to weigh, but there's one final risk variable for you to mull over today.
The Apple situation.
Exactly. What happens if Apple's current lobbying to use Chinese CXMT memory chips succeeds, breaking the SK Hynix and Samsung duopoly completely? That's today's AI Prism. Retail investors, AI-assisted, reviewed, on IFRA. Back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.